Hi, and welcome to the Secrets of Savvy Real Estate Investing. My name is Bill Miller, and I'm going to present to you a 4-part video series to show you the gems and the shortcuts of effective and profitable real estate investing. In part 1, we're going to go through an overview of the steps in becoming a real estate investor. In part 2, we're going to explore why investing in urban real estate really makes great sense. In part 3, we're going to dissect that proverbial location, and explore what that really means and how that uncovers real estate riches. In part 4, it's going to be all about finding those hot markets for buying investment property. So let's get started. Back in the days of the Wild Wild West, when Easterners traveled across this vast country looking for opportunity in the newly opened territories, they were often referred to as tenderfoot. This wasn't a complimentary term, but it was rather an apt one. The Easterners wore city shoes that just weren't designed to withstand the rigors of the Western terrain. And their hats didn't have wide brims to protect them from the sun, and their clothing wasn't made of tough material like denim. These new Westerners didn't know how to take care of themselves, and because they didn't know where and what the dangers were, they didn't have any idea how to avoid them. If you're just beginning to consider the idea of investing in real estate, you're a tenderfoot also, and you need to do some instruction to avoid losing your shirt, and probably your pants, hats, and boots as well. First, you're going to need to determine your strategy. So let's get your game face on. The first thing that you're going to need is a strategy. So step 1, define your strategy. What are the different strategies of real estate investing? Well, for one thing, you could buy a property, and if it needs fixing up, go ahead and fix it up and then sell it. Or you can buy a property, and if it doesn't need any fixing up, you can flip it for a huge profit. Or you could buy a property and hold on to it and then rent it out. All these questions are ones that you need to answer before you invest in any piece of real estate. So once you define your strategy, you go to step 2. And what you're going to need to do is to investigate the value of the properties on your own. It really isn't fair to use the time of the real estate agent and have them show you property after property while you try to look for a good real estate investment. You can do a lot of this legwork yourself. There are several online sites that are helpful in determining the value of real estate. But don't rely on tax values. They're not reliable and they're not accurate either. Okay, so now we're ready for step 3, and that is to form your team. The first thing that you're going to want to do is find a good real estate agent to work with. And it's best that you can find a real estate agent that's also a real estate investor, because they'll be able to coach you as far as what are good investment properties to buy. And after you've learned to determine property values yourself and have chosen a real estate agent that you can work with, the next thing that you're going to need is a good broker that you can also work with. You can ask your real estate agent for the names of 3 brokers, and then go through a process and choose the best one that you want to work with. You'll need to find out what interest rates and closing costs each broker charges, and also compare them to the local bank and credit union as well. Take copies of your credit reports and choose a sample property for each broker to run hard numbers on. And then just pick the broker that you want to work with, the one that suits you best, the best choice out of the 3. So now you're ready to actually make your first investment. So making your first investment, you're going to want to choose the lowest price house in the best possible neighborhood to put a contract on. Let's say the cheapest 2-bedroom house in the best neighborhood in Fort Wayne costs $100,000, and the next cheapest comparable home is listed for $140,000. If you buy the home that's priced at $100,000, you can raise the price to $130,000 the next day and make a dandy little profit. So now let's talk about closing the deal. First, show the seller your pre-qualification letter from the lender, and then get the required inspections for termites and get your appraisal. And once you have all your ducks in a row, so to speak, it takes about 30 days to make the final close. And just a little note here about any renovations or repairs that you might want to make to the property. Before you close, you might want to think about a purchase and renovate loan. A purchase and renovate loan wraps the cost of construction up in the loan, so you don't have many out-of-pocket expenses. This may require an estimate from a general contractor and plans from an architect as well. So now let's go back to the very first thing that you need to do, and that's to determine your strategy. And I'm going to keep coming back to this in the entire video series because it's just that important. So what's your strategy for profiting? Now is the time for you to start executing that strategy. If you bought it with the strategy of flipping it and waiting for the market to go up, then you just simply wait. If you bought it with the strategy of renovating, and then selling it, then now is the time to start your renovations. On the other hand, if you bought it with a strategy of renting it, it's time to start looking for tenants. You see, the point of having a strategy for profiting from the purchase of any piece of real estate must be the very first decision, because everything that comes after that is dependent upon it. Coming up on the next video, we're going to be talking about an awesome niche in real estate investing that surprisingly not many investors go after, but it's one that's very profitable, and that is urban real estate. So I'll see you on the next video.